What's up, everybody? It's your boy MIA with another installment of 5 Things to Know in the Market this week. But before we get started, just a reminder, we are live each and every weekday from 9 a.m. to 4 p.m. breaking down everything market-wide. So please take a second to like this video, subscribe to the channel. Be sure to click that notification bell so you know when we go live or bring you one of these time-sensitive videos. Now let's get right into it. First up, we have President's Day on Monday, so first and foremost, the markets will be closed on Monday here in the United States, so hopefully everybody gets the opportunity to enjoy the day off. Moving on, we will be looking at some big names in retail set to report earnings this week, highlighted by Walmart and Home Depot. Walmart, the largest retailer in the U.S. by revenue, is expected to post earnings per share of $1.52, which would mark a 6% decline and the third consecutive quarterly decline in earnings per share. Sales are projected to rise about 5% to just under $160 billion. Home Depot is expected to report quarterly earnings of $3.26 per share, an increase of 1.6% year over year, and revenues are expected to be $35.97 billion, up 0.7% from last year. In total, the reported earnings for the S&P 500 companies have exceeded projections by just 1.1%, well below the 5-year average of 8.6% and the 10-year average of 6.4%. So not good earnings thus far in the sense of earnings per share. Next up, we will be awaiting the FOMC minutes. On Wednesday, the Federal Reserve will release the minutes from the latest FOMC meeting, which could provide more insights into the future trajectory of interest rates. Traders will be looking for any signs of dovish or hawkish tones to signal a potential pause after the next FOMC, or further rate hikes to come. After the CPI and PPI both came in higher than expected, and with jobless claims coming in under the expected number last week, Jerome Powell's job just got a little tougher. Which brings us right into the next thing we'll be watching for, which is the Personal Consumption Expenditures, or PCE, price index that will be coming out Friday morning. PCE, also known as consumer spending, is a measure of the spending on goods and services by the people in the United States. According to the Bureau of Economic Analysis, PCE accounts for about 2/3 of domestic spending and is a significant driver of gross domestic product, or GDP. The PCE price index is projected to have risen 0.3% last month, accelerating from a 0.1% gain in each of the previous 2 months. Prices are expected to have increased 4.8% on an annual basis, down slightly from 5% in December. Core prices, which exclude food and energy costs, are projected to have risen 0.5% last month, accelerating from 0.3% in December. Year over year, however, the core index is expected to have decelerated to 4.3% from 4.4% in December, and compared to a peak rate of 5.4% in February of last year. So more data that will be critical to the Fed as we set our eyes on the March FOMC meeting. And lastly, we will be looking for updated home sales figures. Existing home sales are projected to have rebounded last month to 4.1 million units, up slightly from the 4.02 million in December. This would mark the first increase in sales since January of last year, when they totaled 6.49 million. New home sales are also projected to have risen slightly to 620,000, up from 616,000 in December. Home sales were likely boosted last month by falling mortgage rates, which fell from 20-year highs hit late last year. The average rate on a 30-year fixed-rate mortgage fell to 6.09% in early February after peaking above 7% in late October. And that is all for this episode, folks. Thanks for watching. And again, be sure to check us out live each and every weekday as we cover these and all other things affecting the market. Everybody have a great day.